you leader, entrepreneur, business owner, solopreneur, whatever you call yourself, we know you're a visionary business builder, wealth seeker looking to combine a passion for doing good with leading consciously. It's time to shift from a traditional focus of pure wealth accumulation to one that integrates well-being and fulfillment. You're here for a purpose, and it's time to shine your light. So here we go. Welcome back to the Conscious Edge podcast. I'm your host, Alecia St. Germain, founder of the Conscious Edge, where I help women entrepreneurs get out of their own way so they can live the life they want. I cannot wait for you to meet Lisa Moore. I've known her for a couple of years now, and seeing her journey and the powerhouse that she is, the vivacious, bubbly, go-getter attitude that she has, you are going to love her. She is so infectious. Lisa Moore, I'm so excited that you're here.
Thank you. That was such a nice little intro and comment.
All true. But I'm going to let you tell people what you do. What is it that you currently do as your wealth strategy?
I am a real estate investor and a fund manager. So I got started with house hacking. So a little of my background, I grew up in Massachusetts. I moved to Utah in 2016. Knew I wanted to get into real estate, but didn't know exactly what. But I knew I didn't hate my W-2, but I knew it was not going to get me to the lifestyle that I wanted.
What was your W-2?
I was a financial analyst. So
okay.
For 17, 18 years, went to school, got my degree in finance, had my MBA, and working as an analyst for my career. And as I said, I didn't hate it, but I knew it was never going to get me to the lifestyle that I wanted. And when I moved to Utah, I was like, all right, I want to get into real estate. I know that it's a great avenue. I know there's a lot of potential in it. I didn't know much about it at all.
How did you know about real estate? Did you see something that piqued your interest, or you're just I'm curious?
I think just hearing things over the years and talking to people. With my first husband, he owned a house, and we had a neighbor actually that ended up moving out, and we were trying to buy that house. So I think just here and in school, I took real estate classes in school. I didn't focus on real estate in school. I wish I had. I wish I started at 19
we
or 20.
Always wish we started whatever it is we're doing sooner. Yeah.
Yes. But I just think school was probably the biggest time that I really kind of learned about it. But then just always kind of educating myself on finances and wealth building and what I can do, because I never felt like my W-2 and I had a good job and I was paid well, but looking at still what I made and how much I paid in taxes was all right, there's got to be another way. And once I started doing real estate and house hacking and got that taste, I was like, okay, I don't know where I'm going to be headed in real estate exactly. I'm but this is the avenue I want to go.
For anybody listening who's not a real estate investor, because we have all kinds of business owners, what is house hacking? Because they're this sounds interesting. What is house hacking?
So house hacking is basically just generating income from your primary residence. So that could be you have a roommate. That could be you rent out a part of your house. You rent out a basement. You live in a duplex and rent out the other part. I lived in a tiny 777 square foot, 2-bed, 1-bath house and rented a bedroom. And I did it on Airbnb, so I didn't have somebody there all the time. But it's basically just generating revenue from your home.
From your home.
A lot of people house hack and don't realize it. They buy a house and have roommates.
For some people, it's the only way they can live in the location that they want to live in, right? And so they accidentally end up house hacking.
Exactly. I mean, Utah is an expensive market. And for me, that was 100%. I'm I don't want my living expenses to go up. I love to travel. I love to be able to do fun things and be able to afford that. And I didn't want buying a house to cause me to no longer be able to do that. So I knew as I was looking for a house that I was going to be renting out a bedroom on Airbnb to help offset my expenses. So I was closer to what I was paying without having to take this big dent out of what I want to spend my money on, which is travel and having fun.
Yeah.
So that snowballed and grew. I met my now husband. Together, we have about $7.5 million worth of real estate, all long-term rentals between 3 different states. I'm also involved in several passive deals and partners on RV park and storage unit. And then my fund, we work with passive investors that are looking to diversify their retirement out of just Wall Street and be able to still get double-digit returns and have that backed by real estate and be able to continue to grow their wealth in ways that might fit them better or be able to give them more cash flow or more tax advantages. Just making sure that people understand options outside of Wall Street.
Yeah. So if you have a W-2 or you own a business, your only option is not just to put your money in the stock market. You also can meet a fund manager like Lisa, who can show you how to diversify that into real estate that you have. It's not control, but like you have control where your money is being put. You're making the choice on the investment that's being made.
Yep.
Awesome.
And it just gives more diversification. Like I used to think, okay, I'm in 4 or 5 different mutual funds or different, stocks and things like that. And it's still all based on the stock market. It's still, you just see, and granted long-term, obviously short-term though, just like the emotional things that happen and stocks skyrocket and this drops and that goes up. But I wanted something that I felt I understood more, that I felt more comfortable with, and that I felt had a better potential to help me achieve what I wanted to.
So that's fascinating what you just said there. You are educated in finance and you don't feel like you understand stock as well as you understand real estate. Is that what I just heard you say?
Yes, but there's many different kinds of finance. So my finance was, I was working with manufacturing company. I was doing P&Ls, doing balance sheet, digging into reports like that. My intention in school was actually to go and to be a financial advisor and do all that. And I started that course. I did an internship with a very successful financial advisor in Boston. And while doing that, I was just going, I do not jive with this. I do not vibe with this. And actually in college, I had a professor in one of our finance classes talking about, he's like, there's so much that has come out, so many mutual funds and so many products that you can get. He goes, if somebody takes more than 30 seconds to explain it to you and they can't really articulate exactly what it is, he's like, they're probably making way more money than you ever will in it. And I was like, interesting. So like the stock market can be great. Obviously, you can be very successful in it. It does go up, like things like that. Obviously, I'm not saying the stock market is bad, but for me, I would rather put majority of my money in real estate, in something that I feel I can have more control over or is backed by something tangible.
I think that is, and I don't mean to make this about women versus men, but I wonder if that a lot of times I know women want to invest in something they understand. Like I even think of Kim Kiyosaki, like she doesn't do stock either because she's stood up there and said, I don't understand it. It doesn't make sense, does not compute. And so you don't want to just do what everyone else is doing. You want to understand where your money's going, why it makes sense, why it feels more secure to you. So what makes real estate feel more secure to you, or what do you understand better about real estate that makes it feel better?
I think the fact that, one, it is tangible, like I can physically go to the assets that I'm passively invested in. I can see them. There is always going to be a need for real estate. People are always going to need a place to live. There's always going to be stores. There's always going to be shops. There's always going to be a need for industrial and retail and all these things. We can't create more land. I live in Utah where literally like you've got the valley and you've got one mountain range on one side and another mountain range on the other side. Like there's no creating more real estate. There's no creating more land. So having that and owning that and knowing this is always going to be in demand in some way. Neighborhoods change, areas change, they evolve, maybe from industrial to residential or the opposite or something. But there's always an evolution within real estate, but there's always a demand. You're always going to need places to live, whether that's apartments, whether that's homes. So for me, just knowing that there's always that demand, you can't create more land. It's just always something that will be needed.
I think my experience is like it shifts slower too.
Yes.
You can have some kind of bad press about somebody running a company, and it will shift the value of a stock by so much money in very short amount of time. It's like, it's so like the stock market feels like it's very emotionally driven.
I feel like it is a lot more now, because you think about like prior to all the social media, like if you wanted to buy stocks, you had to go to a broker. You had to go to someone. You couldn't just go online and be like, all right, I want to trade some stocks today. So you were having to go to someone and they would do that, buy and sell those stocks for you. Now with the E-Trades and the Robinhoods and all those platforms that you can just go on and just buy and trade stocks. Yeah. You hear negative press and everyone just, they can dump the stocks. I mean, it can sink a company with enough bad press. It could be very hard to recover from.
Yeah.
Depending what happens. So I do think it is definitely very emotional, definitely in the short term, those swings. And yeah, real estate, yes, you can definitely have bubbles and you can definitely have some like quick drops, but it's not that common.
It's not overnight.
Yes.
It's not because something came out, some press release came out, and overnight things shift. Like when we talk about a bubble, it's like there's a trending down sort of thing that happens, or there's, so if you're watching your market, you can follow it and you can react faster, I think, to preserve and pivot. Again, not saying I'm against stocks. It's not my cup of tea. It's not necessarily your cup of tea, but I just want to bring the idea that, real estate does make sense and it is a great strategy for wealth building.
Yeah.
What do you think not enough people know about?
Two things. I don't think people know enough about their options outside of the stock market.
Mm-hmm.
I don't think people realize that they can invest in real estate. And I mean, even if you're into gold or silver, or these other alternative assets. And I think with retirement accounts, I think people most people, you're starting in your 20s and you're starting your retirement account and you can't touch it to your 59 and a half. Some with the Roth, you can kind of touch principal, like there are some nuances, but basically expectation is you're putting your money into a retirement account. You're not going to touch it to your 59 and a half.
Well, because it's slow growth too, right? So it has to get in there early and time is your best friend.
Yes.
In that kind of account.
Yes. And time's your best friend with real estate as well. But I think when people are putting money into all retirement accounts in their 20s, they're thinking, dude, that is so far away. They're not thinking about it. But then they're getting to their 40s or 50s and going, I may not be able to fully retire right now, but I have enough in my retirement and enough there that I could maybe work part-time or do some consulting or do seasonal work. But then they realize everything is in a retirement account. I can't touch anything until I'm 59 and a half. So I think not enough people realize or are told have accounts. It can still, if you love the stock market, cool, still have it in the stock market, but have it in something outside of a retirement account. So you have access to money before you're 59 and a half. So if you do want to take some time off, whether that's because you never want to go back to work again, or you're having health issues or life issues or needing to take care of a parent or whatever it is, having money that's invested, that's sort of intended for retirement or later in life, not something that you're going to be pulling from, but think of it as a retirement account, but that's not in a retirement account. So you can get access to it earlier. So if you do want to step back and not work full time and be like, I can afford to work part time or do seasonal or consulting or something like that. I don't think enough people realize or think I should also have money set aside for long term in something outside of a retirement account. Everyone's just so brainwashed with retirement accounts, and rarely told about, hey, put something outside of that as well.
So what I'm hearing is you want to redefine retirement age, that freedom that is maybe defined by retirement can come at a different age than what we are taught.
Yeah. And mini retirements, maybe you just want to take a year off and travel. I mean, so you hear so many stories of people working their whole life. They get to their 60s, they retire, and something happens. They can't travel. They don't have good health. They're not in a situation where they're physically able to do things. And they didn't do things when they were younger because they're like, save until retirement. So to me, it's just like, what do you want out of life? What would make you happy, and not feeling like you have to follow what has been, like, in my opinion, just like shoved down our throat of like, go to college, get a good job, climb the corporate ladder, work until you're 60, 65 and retire and be able to do stuff. Like, I don't think that fits for everyone. And I don't think that's what everyone wants. And I think it's realizing what you want and then figuring out, how can I make that happen? And there's so many avenues that you can make that happen outside of what we're told.
So how has your real estate funded that freedom to travel? Like, where do you travel? What does that look like?
So we definitely, for a few years, were just busting ass and just doing house hacking, living in construction, because we wanted to get to the point where it could support us. And now it's like, I consider myself retired because I don't have to go to a W-2. I don't have to go to a job, but I'm not someone that's just going to sit around and do nothing.
Yeah.
I enjoy working. I enjoy educating and teaching people. And I enjoy real estate. Like, we're in the middle of a project now, and it's one of those like love-hate where like it's fun and we enjoy doing it. But there's definitely the days you're like, God, why are we doing this? But overall, like, it's something that we enjoy. So I think just focusing on what we knew we wanted and knew that real estate was going to get us there. Our goal was not to never work again and never do anything, but real estate definitely got us to the point where we have, I'll say, passive income. We have a passive income from our rentals coming in that we could take a step back and be like, okay, what do we want out of life? What do we want to be doing? Like, we do love to travel, and we try and travel as much as we can. We like living in Utah. There's so many amazing things nearby, but we went to Africa. We've gone to Greece, and we've gone all over and done these amazing things because I have, and so does my husband. Like,
I know, that's what I want to hear. Like, where'd you go? Okay, cool. Africa.
Yeah,
amazing.
We did Africa. We did a safari and scuba diving in Africa. We rented a small yacht in Greece for a week. We all over the US. We did like a 2.5, 3-month road trip all over the US, ended up in Canada, went down to Mexico. And that's what we love. Like, I love exploring out west. We love camping and going to all these weird places that I've never heard of and just randomly drive and be like, this looks like a cool place. Let's go.
That's amazing.
But it's having that time freedom and that ability to be able to just take a step back and be like, what do we want to do? And not having to worry about, I only have a 2-week vacation or 3 weeks or 4 weeks. And just building a life that makes us happy and fulfills our why and fulfills more than just, like, I'm not a money-driven person. I could care less about having a private jet or a big yacht or any of that stuff. Like, is that stuff nice and luxurious? Sure. Am I willing to work that hard and give up doing so much to get to that? No.
Yeah. Because you know what it took you to get to where you are now. And there's a grind, right?
Yes.
Like,
yeah.
You said the word passive. We have passive income, and you used quotation marks. So I want to double click on that. Like, why did you use quotation marks around passive income?
I definitely think people say passive income and it's like you do nothing and it's just flows in. And for us, it is fairly passive. Like me, like going to a W-2 is not passive. You're going there every day. You're spending 40, 50, 60 hours a week or more at your job in order to get that money.
And if you don't go outside of your allotted sick time and vacation time, you don't get paid.
Yes.
Yeah.
Yeah.
Okay.
Where with our rentals, we get paid no matter what we're doing. So yes, there's times like we have to deal with maintenance and we have to deal with turnover and things like that. And there was several years where we had very little turnover, very little maintenance. The market in Utah was crazy. It was really hard to find apartments. And we're like, man, we may have worked like a few hours, maybe a month. It was very little work. Where now, so like to me, that's extremely passive. Now we might have to work a few hours a week, but that's still to me very passive compared to having to go to a W-2 and go there every day. And people in real estate push like passive investing and passive income. But to me, nothing is truly passive. Like, even if you come to me and like, hey, I want to invest in your fund, it's still in some ways not passive, because like you should still be doing your due diligence. You should still be researching, whether it's me or another fund or other investors, like who they are, what their experience is, making sure that they align with you, things like that. And then like vetting the deal. So you still have work to do. Even if you're a passive investor, you still have to do work to make sure that who you're investing with is in alignment with you, and it's going to be a good deal, and it's going to achieve what your financial goals are. Like,
yeah. So it sounds easy. That sounds so easy.
yeah.
But let's walk through that for a second. So someone has money to invest. They're like, real estate might be an avenue for me to do this. They meet someone like you, let's say a fund manager. What's the first step?
For me, it's finding out what their goals are, because not every investor is looking for the same thing. It's just like the stocks. Not every investor is a high risk, high reward type person. So you really need to know like, and what stage you're at. If you are later in life, in your 50s, 60s, whatever, like personally, like you probably shouldn't be putting a lot of money in very high risk, whether that's stocks or real estate. You should be doing more conservative stuff. So you can look at it the same as you do with the stock market, where, okay, as you're younger, you can be in more aggressive investments. You can be in stuff that has a little higher risk, that has the potential of higher return, because if you lose money, you have more time to gain it back. As you get older and as you get closer to really needing that capital, you want to be more conservative. So for me, when I talk to investors, it's not like, here's my fund, this is what I do. It's, what are you looking for? Like, what are your financial needs? Because our fund doesn't match everyone. Like we're definitely a more conservative fund. We do a lot of debt. So we're looking at it as more like, we just want to preserve our wealth, build some income, and be able to just keep snowballing that money and growing it. Where there's investors that I talk to that are in their 30s and they're like, we don't want anything below a 20% return. I'm still in the super aggressive mode. And I'm like, awesome. Like, you're not a fit for us. If I come across someone, I can definitely refer you, but you're not somebody that fits with us. So for me, the first thing is finding out like, what are their goals and what are they needing and wanting financially, and what are they trying to get to? And I don't think enough people spend the time asking the investors that. They're just trying to like shove their deal down their investor. And it's like,
down the throat, because they want the scarcity of wanting the money. I think you're in a really unique position. I have a follow-up question to that, to what you just said, but I think you are in a really great position in that, because you have hustled to the point that you needed to get to the point where you had reoccurring income that comes, whether you're sick or not, whether you're traveling or not, with minimal maintenance, we'll say. You can be a little bit more unattached, or it's easier for you to be unattached to who invests with you and who doesn't. So you can really focus on who's the right fit. Where I think that when you have someone who's leading with scarcity and they want to get the money into their deal and they're worried, like, am I going to find money from someone else, or bending over backwards, or trying to like say what they think you need to hear so that you'll invest with them, because they're coming from scarcity and they're really attached. I think that makes it, I think you have to dig a little deeper into that person, find out their motivation. You mentioned something when you said we do a lot of debt. What does that mean?
So basically, we become the bank. Normally, if someone wants to buy a house, you're going to buy your home and you're going to your local bank or credit union or one of a Rocket Mortgage or Quicken Loans or whatever to go to be able to buy that house. So you're bringing 5, 10, 20% down, and then the bank is financing the rest. We are the bank, but we do it on fix and flip. So there's a house that's all crap house. Somebody needs to buy that house. Oftentimes, you're not going to get a normal conventional loan. The conventional loans are what most people use to go and buy their primary residence. A lot of times, these houses that investors are buying, they're not nice houses. There's issues. There's electrical issues. They're hoarder houses. They're disgusting. Like, they need to be completely gutted and fixed up. Yeah. So they can't get a loan. Most can't go to the normal bank down the road and get a loan for it, because there may not be plumbing, there may not be water working, like there's issues with it, so they can't get the loan. So they come to people like us, where we will lend them the money to buy that property and the cost to rehab that property so they can go fix it up, make it nice, get it updated, and then be able to sell it to somebody who would normally never buy that house because of the condition it was in. Like
Right.
investors aren't going around buying up the nice houses in the neighborhoods. They're going to the neighborhoods and like, where's the crappiest house that's about to fall down or is in an issue or just has been sitting and is the eyesore of the neighborhood. I mean, most people, if you really think of it, they're happy when somebody comes in because they've been looking at this house that's been abandoned for 2 years that nobody's done anything to. They don't take care of the yard and it's just falling apart and it's bringing their property value down. So somebody comes in, flips that, makes it nice and updates it. That's going to help the property value of everyone around them because now that house is worth more and it looks a lot nicer and you don't have that neighborhood eyesore. So we become the bank on people that are looking to do that or looking to develop ground up.
So you've got your investors
Yep.
that come into the deal who don't necessarily have real estate knowledge. What would you tell them? Because they wouldn't buy that house that is your criteria. That to them may not feel like it's a low risk investment or lower risk. Because you said you would want something lower risk. And now you're telling them that you're funding these houses. Your fund is funding people who are buying these houses. How is that lower risk?
So it's like anything. You have to make sure that you're really like analyzing the deal and digging into it. So when we're funding, we're looking like one of the first things we look at is once this house is fixed up, what can it sell for? So just for even numbers, it can sell for $1 million. If they're looking to buy something that needs $200,000 worth of work and they say, I'm going to pay $750 for it, I'm like, that's not going to work. So we're looking at the numbers of what can they sell it for, and they're buying it for a very, very deep discount. So a house next door might be selling for $500,000. That's all fixed up and nice. You're probably trying to buy yours for $150,000, $200,000, depending how much work it needs. And when we're looking at it, if something can sell for, again, for even numbers, if the ARV is $1 million, we're not going to lend them up to $1 million. We're going to lend up to, maybe 700,000. We're going to look at a loan to value of about 70% because we want to make sure that there's plenty of room where if things do take a little longer, if they do go over budget on stuff, that there's plenty of cushion in there. And we all have experience with rehabs and construction and stuff like that. So when people are coming to us and saying, hey, this is what it's going to cost us, we can look through, like I had a deal sent to me a couple days ago and I'm looking through and what they're saying things are going to cost. I'm like, you are never going to get this done for that much. So like with our experience in knowing what things cost, we also can really dig into the numbers in their budget. Like if someone says it's going to cost $300,000 for a rehab, we don't just go, okay, cool, here's $300,000. We're asking for all the details. Like, where did you get that number? What is the flooring, paint? Are you doing kitchen? Are you doing bathrooms? How many bathrooms? Like, what's the square footage? We're digging into all the details so we know what exactly they're doing. So we can get a good idea of, okay, does this pricing look correct? And we're also making sure we work with people who have done it. One of our main borrowers, actually most of them, all of them, they've all been doing it for several years or 15 or 20 years. Like, so we're not having someone that's never done anything before coming and like giving them 100%. There's definitely people that do that, but you're going to be much higher risk and you're going to be getting a much higher return on that. But you also have a much higher chance of not getting paid because you have someone that's never done it before. They're lending 100% on it. So everything has to go perfect. It's got to sell for what they think. It can't go past budget. So it's really just analyzing and really digging into like making sure we're mitigating as much risk as we can. And we also only lend in markets and areas that we know and where we have boots on the ground or we have other assets that we have people there. So we can really, if something like in Utah, if something was to go bad, my husband's a GC, my partner, he's a GC, like worst case scenario, like we can jump in and do stuff and not have to take a loss or take over the house. So we also sit in what's called first position. So when the house goes to sell, we're the first ones to get paid. But if they're not fulfilling their side of it, we can basically, it's like a normal foreclosure. We can foreclose and take over that property to make sure that we can get it done, get it sold, and get our investors paid.
Well, and there's something to lending to the business owner as opposed to lending to the homeowner, right? So these are quick in, quick out, right? Because they're getting resold and then someone else is coming in with their conventional loan likely. So there's the time frame that's collapsed significantly, but also it doesn't really make sense for these investors not to pay you what you're owed because this is their livelihood. This is how they feed their families.
Yeah.
And so since you're working with experienced people who have a track record, it doesn't make sense for them not to pay you. So I just wanted to be really clear for listeners who are not real estate savvy that that's why you can turn something that looks like a high risk investment to you, the layperson, and turn it into something that's actually considered more conservative.
Yeah. And that's why I like being in first lien position, meaning like we're the first ones to get paid if something happens or if it sells. So like they could not sell the house and not pay us back. So if you are looking into investing in real estate and starting to diversify or whatever, and there's somebody that does that, ask what position. Do you do first position? Do you do second position? Because that does make a big difference. Because a lot of, and not all, but a lot of second positions. So like I said, we'll only go up to 70% loan to value. A lot of people come in on second position to fill that final 30%. That's a much higher risk. You're going to get a higher return, but you're also going to be in much higher risk of not getting a return.
Yeah. When she says getting a higher return, that means like the interest rate that is charged for that higher risk position is higher. Yeah. And so you can get higher returns because it's higher risk, but you might not get paid.
Yeah. So like our borrowers pay 12%. So basically 1% a month on the money they have borrowed. Our investors, we pay them 10%, or if they come in with $200,000 or more, they get the full 12%. If you're sitting in second position, depending on things, like you should be easily 15, 20 or more percent, depending. It's very hard to say it should be like X percentage because there's different levels of risk within the second position and they may not be at 100% and all sorts of things. But like, if you're looking to invest, definitely ask, is this first position? Is this second position? What's the total loan to value with all lien positions? And that definitely can help mitigate your risk. Or if you're looking for something high risk, like I know people that are like, I only want second position because I want that chance of higher return.
Yeah. So. Right. So they're willing to take that on. Okay. So you said the first thing was not enough people. You said there was two things not enough people know, like all this from that one question, right? So the first thing was they don't know that there are so many other options for investing outside of their retirement accounts. Having access and investing in an account or investing in a way that gives you access to your money sooner than retirement age. Was that the second thing or was there something else?
Yeah, no, that was
the second thing. Okay. So I wanted to make sure we got that very clearly. Like you have the ability to be able to invest in a lot of ways outside of what you're traditionally taught and making sure that some of what you're investing, you have access to so that you can take the sabbaticals, which like, I think that messes with people's minds to think that they could just like take a year off and go travel and see the world.
Yeah.
And I know that people would have to, and this is where I get into when I'm coaching real estate investors, is like, you could do that, but then you don't because you become kind of like workaholics.
Yeah. I think no matter what you do, whether you're in a W-2, whether you're a real estate investor, like it doesn't matter. Like I think so many people get so caught up in the like, okay, I'm going to work as hard as I can for like 3 years, 5 years, and then I'm going to take time off. But they get so used to the grind and they get so used to just like pushing and building and not knowing like, what are you working towards? Like, what is your goal? Because otherwise, you're not going to stop because you're just going to keep going. You're just going to keep pushing and you're never going to take the step back and be like, all right, let's just enjoy life for a little while.
Yeah. Did you struggle with that at all?
Not really. I feel like my parents very much instilled in us, like travel, have fun. Like my dad worked for Lockheed Martin. He was very successful, but growing up, he's like, the company doesn't own you. And he was like a senior engineer there, and he rarely worked late. He was always home. He was always at my sporting games and coaching my teams and that stuff. And just growing up and I was always into finance and numbers and that stuff. And like, I was always like, I'm going to go to school and do finance. And just him instilling in me, like, you can still work for a company and you can be successful and do these things without them owning you. But I think it's so hard for people to be like, oh, well, I couldn't do that. But for me, like, I never would have worked for a company that wasn't flexible, that didn't give me I was in finance during budgeting, during month end, your ass is going to be working late. That's just like, you're going to. But I also always worked for companies that when we weren't in the busy stuff, I could take time off and I didn't have to worry about it. I wasn't like, you have to be here every single second. Oh, you've worked a bunch last week. It doesn't matter. Like, I always worked for companies that were flexible because that was what fit my lifestyle and my desires. So.
All right, Lisa, I have a question.
Okay.
What has been the struggle for you? Because everything I said, you're a powerhouse. I think anybody listening to this would agree with my opening statements. Like, you are a powerhouse. You are empowering to other people. You give people away. You're very clear on who you help, how you help, what you're doing, why you do it. So where is it that you struggle?
My biggest struggle is probably with relationships, and more so like maintaining and keeping a lot of relationships. Like, I am someone where I have a very small friend group. In my whole life, I was like that. Like, I was never someone that was always looking to hang out with a bunch of people. Like, to this day, like, I have a very small friend group. I only have like one or two people from high school that I talk to. I have one person from college I talk to. Like, I have a very small group, but I know that they would do anything for me and I would do anything for them. And in this line of work in capital raising, it's like, okay, now I have to like expand my network. I have to nurture relationships a lot more. And I've never been someone like, I talk to some of my friends and like, yeah, the people I used to work with 15 years ago. I was like, man, I have not touched, like, I haven't stayed in contact. And I was never big on social media. And that's how so many people, it's like LinkedIn or Facebook, like, stayed in touch with people. And I was never a big social media person. I use it a lot more now and try and get out there and like, hey, we were best friends 15 years ago. How you been? Like,
yeah.
So that's definitely the one thing that getting out there and like expanding, like, I have no issue going up and talking to people and meeting people. My husband's always like amazed. Like,
I was like, wow, you act kind of like, you describe yourself kind of as an introvert, but you act like an extrovert.
So it's funny. I'm very protective of my time because I've definitely had periods where like there have been people in my life and been surrounded by people that were just negative energy. And now I'm extremely protective of my time and I'm very protective of who I surround myself with. But the more I go to conferences and network with people that are in the same thing and finding people like more people that are in my alignment and my values and look the same way. But yeah, like when I go to a conference, it's like, okay, why am I at this meetup? Why am I at this conference? What am I trying to achieve? Okay, am I here because I know there's going to be a lot of accredited investors and I need to network with them? Am I going because I'm looking for operators that we can partner with that are looking for capital partners? Am I looking just to network? Like, I definitely go there with an intention because otherwise, like I said, like I will go and talk to anyone. My husband's always like, you just like, and I'll go to like the speakers up on stage and start talking to them. But I'll just sit back and be like, who do I think either I can bring value to or can help me grow? Like, I try not to get stuck in the conversations that are not going to either help that person or help me. So I'm very intentional with who I talk to. So I definitely can tend to sit back and be like, all right, who here do I want to network with and talk to?
Yeah. And I think that's really important to be intentional. And I think that's something that a lot of people struggle with because they don't want to hurt people's feelings.
Yes.
And you and I have talked about that on panels before about like hurting people's feelings, letting relationships go that no longer serve you. And just, I admire your directness. You're like, yeah, no, we're not going to hang out anymore because you don't support my dreams. So bye.
Yeah.
And I think that's awesome. There's so many different ways that people kind of trap themselves into boxes. And I've just watched you over and over again, just not like, nope, not going to put me in a box. I'm doing this. You're a force. And I love that about you.
Thank you.
Where can people go to find you?
So on socials, you can follow me on Instagram at More Doors with Lisa. My preference is definitely hopping on a call. You can go to investwithlisamore.com. That's Moore. Because I definitely prefer having a conversation, finding out what your goals are, what you're looking to achieve, and then if I can help you or if I can refer you to somebody that could help you.
Awesome. Thank you so much for being here, Lisa. And for everyone listening, I hope that this gave you some insight into some other options that you have available to you and really thinking about how you want to live your life intentionally and not just following the status quo of so often we create businesses and then we take our mindset from our jobs and we apply it to our business and it keeps us stuck in the same rat race. We've just created it for ourselves. So this is really poking on that way that you've been taught and then starting to think of it differently. So with all that being said, I'm sending you so much love. And if Jonathan were here, he would say, be well. Thanks for listening to the Conscious Edge podcast. Make sure you subscribe and take a moment to be kind and share this episode with someone you care about. Leave a review to help us bring more compassionate leaders building businesses and creating wealth to the table. And for show notes, head over to consciousedge.com/podcast. This podcast and the linked materials are presented solely for general information, educational, and entertainment purposes and should not be taken as personal or medical advice or any kind of mental health treatment. Please consult a medical or mental health professional if you feel you need such services. Please be advised that all investing and entrepreneurial endeavors involve risk, and the use of the education and information on this podcast and linked materials is at the user's own risk.
This podcast is part of the Sound Advice FM network. Sound Advice FM, women's voices amplified.